Welcome, Full Throttle traders and Urgent Alert members, to your Urgent Alert trade for the week and also our portfolio debrief. For those of you who are test flying or coming to our squadron for our open house this week, the Urgent Alert service is one of our lower price services, but it's included with the Full Throttle package, which you're going to learn about at 1 o'clock tomorrow afternoon after our accelerated retirement session, where we're going to open our 50 slots and you're going to be able to decide whether you're going to be an aggressive, a defensive, or both types of traders, and I'll cover all of that tomorrow. So here's the flight schedule as it stands so far. Last night I did the welcome aboard brief at 8 o'clock. I'm going to show you the replay page where you can watch that, and it is a must. If you did not attend Monday night and this morning, or this Urgent Alert video is the first of Top Gun options to you, you have to watch last night, and I'll show you the replay page. We knocked out a great primary live trade brief this morning. We knocked out an Apple long call diagonal with a protective put. Tech is already recovering, and we're going to knock out my Urgent Alert right now. So we got 3 down and a little bit to go here. Wednesday, AR, accelerated retirement, 1 o'clock. And we're going to open our 50 slots, folks. As I showed you this morning, we have like nearly 6,000 traders and investors of all skill levels registered for Full Throttle, so they're going to go pretty quickly. Wednesday, tomorrow night, you're going to meet Doug Robertson. He's our volatility arbitrage trader, 500-pound head, not because he's bald and has a 500-pound head, and he's an Army guy, but because he's brilliant. He's a vol arb guy. He's going to give you a demonstration of how he trades vertical spreads, a nice hour-and-a-half to 2-hour training session on just vertical spreads. So, for example, in the primary live trade brief today, I covered a long call diagonal with a protective put, and for some of you, it probably felt like drinking out of a fire hose. It should feel like that, because you're going to get on board here at TGO, and we're going to do an hour-and-a-half to 2-hour training just on that tactic. And at the end of that, no fire hose. It's going to be a little bit of a garden hose, right? Then Thursday morning, we do Demo Do. Doug's going to demonstrate vertical spreads Wednesday night in a nice academic setting over a Peanut Noir. And then Thursday morning at 9 a.m., he's going to get airborne in his advanced live trade brief, okay? And then he'll do an advanced trade alert, kind of like my Urgent Alert today. He just sends it out via email in that 7-step proprietary trade plan format. And then Friday, even though it's Good Friday, we're still going to knock out our weekly options live trade brief. I got an Iron Condor that's flying down range right now that could potentially make $2,900 on about $4,300 in risk. And then probably by Friday, folks, we're going to have our 50 slots full. Okay? So let's get airborne and let's knock out our Urgent Alert brief. So this morning, folks, just to remind you, you should have gotten an email with the link to take a look at this page. I'm going to give you access to just this one member page to see what the primary live trade brief folks, our members, get to see. When I got done with the session this morning, I actually went in and did a bunch of trades on our existing positions. So for my Full Throttle, or I'm sorry, for my regular members, all the adjustments to the existing positions are up here at the top. But I also sent out the Apple long call diagonal with the protective put. There's a screenshot of the trade, the metrics, and then here's that S&P 500 hedge that I added right here as well. It's a bear put spread out to May 10th, man, just in case this thing rolls over and gets ugly. And then by the time you're watching this video, the replay video is going to be posted here. It's still rendering here. I got about 10 minutes left until I can post that. So let me knock out my Urgent Alert video, and we'll get airborne. Here's the Urgent Alert member tab. So I'm going to go over to Urgent Alerts. Where do you see the performance of this portfolio year to date? Last week, there's my Urgent Alert. Tried to get filled on an XHB, a housing Iron Condor, and then I adjusted some of my JP Morgan, China, XLF, Disney, Goldman Sachs, and SPX positions. Okay, Disney added to the Goldman. Speaking of Goldman Sachs, those two together, man, it's like a Reese's peanut butter cup. Was added to Goldman's, I think, conviction buy list today. We'll take a look at my current Disney position, and it's the happiest place on earth. So this is what the member page looks like for Urgent Alerts. You just scroll to that post, take a look at the updates. There's the XHB Iron Condor I put out. And then the bull put spread, and I legged into it, right? And then here's the replay, or the Urgent Alert video that I shot last week. There's me sitting right there in lovely Boca Raton, as opposed to Fort Lauderdale here. So this is just a quick visual of what the Urgent Alert page looks like. I don't know if I'm going to give you access to this. You're probably going to just watch this on the replay page. Speaking of which, if you haven't gotten a chance to watch Monday's night's replay or the primary live trade brief replay, it is on this page. You need to head to go.topgunoptions.com/FT-replay. It's not too hard to Remember, go.topgunoptions.com/FT-replay. And like I said, the primary live trade brief video, as I'm speaking, is still rendering. So it's going to pop up here in 8 minutes. And then the Monday night session is available to watch right here underneath that one. Okay, so everything's going to be on this replay page. You don't have to email support. You don't have to give us a call. Everything's on the replay page right there. One last push guys. You got to follow me on Twitter, WizCheck6. Why? Because I post a lot of great content on stock twits. The hell stock twits? You're welcome. So follow me on Twitter at WizCheck6. Okay, Wiz, W-H-I-Z, and the number check 6. That means look behind you, right? That means somebody's right on your tail. Not too many people were on my tail. I was usually doing the shooting. Okay, and one final push, folks. Do me a favor. Head to our Facebook.com/TopGunOptions. A lot of good stuff on here, especially some of you were asking about, hey, what's this live event in June? If you want to join us down here in beautiful Miami, June 9th and 10th, there's information about that event on that page as well. All right. I'm done. I got to get to trading here. Urgent alert, folks. Here is our current urgent alert portfolio. Let's take a look at my Disney trade. Look at this, folks. It's up, what, 16% year to date? That's a $5,900 gain in Disney. This is a definite, folks. And like I said, it got added to Goldman's, whatever they call it, conviction buy, something. When Goldman's saying to get in, folks, they're not idiots, okay? It just popped up here. Yeah, there you go. Conviction. Hey, I was right. Disney is Dow's biggest gainer after being added to the conviction buy list. This might actually, I don't know, I was going to do a VXX bearish double vertical, but Vol's already coming in here. I love doing this, man. I love trading just because it's so fluid. The VIX was up above 15 when we were in the PLTB. And what did I tell you, folks? Well, now I'm going to stick with my bearish double vertical here. All right. But, folks, when you join Top Gun Options, you're also going to get access underneath member content. You're going to have a drop down that says training videos. So when you sign up this week, Doug Robertson's going to do 8 sessions. I think it'll start in about 2 weeks or something. Every Tuesday and Thursday night, I think Doug does it from 7 to 9 p.m. It's all recorded. Like I said, grab a glass of wine and learn about stuff. In addition to Doug's live training you're going to get during Full Throttle, I threw in the last time I taught Full Throttle, all my training vids for free, folks. These are, if you were just to buy these on our website, they're $495. Hey, Wiz, iron condors. Well, Wiz spends an hour and a half to 2 hours talking about iron condors. Today, if you have any question on the long call diagonal I did, you can come in here and watch an hour and a half video of me going through that tactic in detail. Instead of 20 minutes in the PLTB today, drinking from that fire hose, you get access to all this stuff. Double vertical spread. I'm going to do that right now. It's going to be semi-quick. Why? You have access to an hour and a half video on a double vertical spread. So I usually don't drop anchor in the live trade briefs, folks, and spend an hour and a half on a tactic when I can point you, hey, go jump on one of the training videos, okay? That makes no sense. You can jump in here and do that on your own. So very, very happy with what is going on there. So let's go ahead and where was I? Oh, jumping on the Facebook page and doing our portfolio review with Disney. So here's my current position for the folks that are currently in it, and this is a yes. I will add most likely next week a Jan 19 Disney trade to our portfolio. The urgent alert service, you only get one trade a year. This video, a week that you're getting right now. And I'm giving you VXX when I get to the end here. We're going to do Disney next week, guys. That'll be my urgent alert trade. So this is a long call diagonal with a protective put. I'm long 10 of the Jan 18 70 calls and the 80 disaster puts. And I'm short the 115s, bringing in some premium, just like I covered in the primary live trade brief. Now, the 115s expire next Friday, and I'm up 33% in them, $125, and there's still potentially $255 to go in these. So you know what? No changes to Disney. So existing members, sit on your hands with Disney. I'm going to manage those 115 calls. Real quick, take a look at the chart, man. Look at this chart. Let me go back. Let me get rid of my drawings. Look at this chart. Look at the 3-month chart. I just had that up. Look at the 6-month chart. Can anybody say, holy cow, Batman? Yeah. Folks, I'm going to let you in on a little secret. This trade was down about 3 or 4 grand, and now it's up 6. Yeah, you know why? Because Wiz recommended it right around here, and then it did. Look at that, man. ESPN sucks, by the way, guys. But the Star Wars series, their no kidding properties, the parks, that stuff's great. ESPN, don't worry about it. Hopefully they get rid of it. But no kidding, folks. As this was going down, oh, Wiz, why didn't you bail out? You know why? Because most of you emotionally would have bailed out where? Right here. And then that happens. Negative. If your strategic mindset and your commit criteria are still sound in a trade, don't get out of it. As a matter of fact, add to it. So, because folks, nobody except a jerk at a cocktail party says, yeah, you know, I got into Disney right here, you know, or I got out of it right there. No, folks, I told you the truth. I recommend it right around here. Slid a little bit more for about 2 months and then rip your face off rally. Love Disney. Yes, Disney Jan 19, easily throw that one in the portfolio. And again, if you were a current member, I'd say go watch the training vids, and we'll cover how to do that. But Disney, love it. FXI. I have two positions in here. Let me group my short calls together. Excuse me real quick. I'm kind of drag racing these positions, and here's what I mean by that. I have a long call diagonal with a protective put, and I also have a tactic called synthetic stock. Again, if you remember, I'd say go watch the training videos if you don't know the difference. But folks, remember this morning in the primary live trade brief, I went out as far in time as I could, and I bought that deep in the money 80 delta call, right? It was cheaper than doing what I call synthetic stock. And when you, real quick, here's the explanation of what synthetic stock is. First of all, what's it mean? Synthetic stock means it's a 1 delta position, folks. It's just like you own the stock, except you don't get two things. You don't get a dividend. I really don't care. I'm not a dividend trader. If that's you, maybe that's not for you. I don't care about dividends. And you also don't get the vote. I don't care about that either. Anytime I've owned shares and I've got one of those things, you know, here's your shareholder ballot, I'm like, right in the shredder or the recycling. Carl Icahn's got your vote. So those are the two things you don't get with synthetic stock. But here's the absolute benefit of synthetic stock. You're not tying up a boatload of capital like people who are going out to buy the iShares China large cap ETF. That's stupid. That's why we're smart options traders and we don't buy stock. They're chumps. So here's how you create synthetic stock. Think about it. Most of you know when you buy calls, you're bullish. All right, Wiz, I got that. I'm with you so far. When you buy calls, you're bullish. When you sell puts, you're also bullish, and we'll teach you what that means. So if you sell puts and buy calls with the same expiration, in this case, Jan 18, and same strike, in this case, I did it at 32 when FXI was at 32, you create synthetic stock. What did I also do? I bought disaster puts, and then I sold some upside calls. It's kind of like this literally is, folks, a synthetic covered call. You don't have to be a chump and go buy shares. You use the options. If I just saw a couple thousand, 6,000 people registered for Full Throttle, hopefully I saw about 5,000 light bulbs go on because all my members know how to do this. So in this particular case, take a look at this. The long call diagonal with the protective put is up about $1,600. Hey, man, that's not too shabby. Look at the long and 9% year to date. Look at the long call, the synthetic stock. Over 300% return and a $4,600 gain. Hell yeah, Wiz, I like that. Yeah, so our FXI positions year to date are up over $6,000. So let's take a look at the chart of FXI. Folks, you got to be bullish. I would put this as another yes to add to my portfolio out to Jan 19. I covered last night and this morning why to be bullish on China. Not going to take up too much of the airtime now. But these front month upside calls, I think the 39 here looks a little bit like resistance. Let's see how our front month upside calls are doing. I'm short the 39.5. I'm up to next Friday. I'm up $180, 63%. There's another $105 to go by Friday. You know what? And I have 10 in this one. Oops. Let me plug that in. That would have been bad. Pre-flight your jet there, Wiz. So I'm going to, I'm going to roll these down. 15 plus 10 is 25. I have 2 trades. So I'm going to click Close Adjust. I'm just going to roll these down for next Friday and take some money off the table. Like the guy in the song said, go and take the money and run. So I'm going to buy to close 25. Remember, 10 plus 15, 25 contracts. Buy to close 25 of next Friday's 39.5, and I'm going to roll them down to the 39s for about 9 cents, 8 to 9 cents here. and boom, take some premium off the table that I made and bring in another potential 200 bucks, folks. Think of an options wheel. The FXI is a barrel just rolling down a mountain. Every week or month, whatever interval I choose, I'm going to sell some upside calls and collect some premium. So we make money two ways with long call diagonals and synthetic stock. Hopefully we picked a good underlying. Not hopefully, we did, and it goes up. Well, we also bring in some car payments by doing what? Selling front month premium. Okay? And like I said this morning, if the stock goes on a tear, get out of the way. Don't try and step in front of it and sell some upside calls. It's stupid. Sit back, grab your beer, and go, yeah, this thing's printing money. And then if it levels off, like I said today, my rules of thumb, if the stock's kind of flattish to maybe a gentle climb schedule, I tend to sell front month upside calls that are about 2.5 to 5% out of the money. A little bit of altitude, so it gives us some room for it to go up. If it's on a kind of an F18 climb schedule, 7.5 to 10% above the current stock price is where I sell those calls. And if it's doing a unrestricted climb, like I used to do in the Hornet, get out of the way and enjoy profits. Okay? Again, that was relatively quick. We slow it down when you become a member. Now to the massive smile on my freaking face, folks. Look at this Jan 18. I put this on about 8 months ago on JP Morgan before the election. A $23,000 gain in this trade on 10 contracts. In the primary live trade brief portfolio, I showed you some of my members who did 20 contracts on Goldman Sachs that were up anywhere from 100 grand to 135 to 60. Loving our financial trades. Now, obviously, with the healthcare debacle, didn't think I'd use debacle today, but I just did. So there's the implosion. Oh, he can't get anything done. That's not true, folks. But this is potentially a double bottom. We're going through it today because there is a little bit of sector rotation out of financials into tech. But folks, JP Morgan's, I'm telling you, it's a gift below 90. This is a yes. I would add a Jan 19. This is currently my Jan 19 trade. It's up nearly $3 grand that I put on January. So maybe averaging about $1 grand a month in my JP Morgan trade. Anybody wouldn't mind adding an extra $1,000 to their portfolio each month? So I don't have any front month upside calls on. Why? Because we look at over here and go, looky here, in about 2 days, JP Morgan's has earnings. So it makes no sense to step in front of JP Morgan in front of earnings and sell some front month upside calls. Leave it, sit there. I think Jamie Dimon's going to have a good quarter and have some good things to say about JP Morgan. But this is a no-brainer, folks. After earnings, we'll talk next week when you become a new member about putting on that front month upside call. SPX, guys. Real briefly, this is my weekly iron condor. It's a weekly trade, so I'm mixing portfolios here. Sorry, but I just wanted to look at it to see how we're doing right now, which is good. We're up about $750. If this, remember, the market's closed on Friday, so if this thing finishes between my uprights here, below 2370 on SPX and above 2345, we make $2,900 in 4 days on $4,700 in risk. So I'm watching that one. These two are my hedges. My end of April S&P bear put spread and my regular May expiration one. Now, obviously, these are down, quote unquote, but I want them to be. Just like I covered in the primary live trade brief, hedges, I don't care if they make money. If it's a trade, I want it to make money. These, set it and forget it. It's like the Ronco oven. And then XLF. Guys, this is a hold for me right now. The XLF is the financial shares ETF. This thing ain't doing anything for me. It's boring. My strategic mindset, my commit criteria are still sound in this trade, but it's a yawner, man. I'd rather be in Goldman Sachs, JP Morgan, or AIG. This is this was down $800 last week. I sold some front month upside calls. I whittled that down to 570. When I get this back to flat, guys, I'm closing it. So new members, don't take a look at XLF. I sold the 24s. I'm going to roll these calls down the next Friday and maybe make a little bit more premium. Roll down, add edit legs. Buy to close 15 to Friday. Next Friday's 24s, and let's do the 23.5s at 14 cents. And I might even, this trade might even be to break even by next week when you're a member. And don't deploy capital here. That's me talking to me. All right, here we go. Bearish double vertical on VXX. I wish I had done that in the PLTB this morning. But remember, folks, there's a difference between hedging against a spike in volatility and the market pulling back. Now, this is, I should have done this live, and I'll probably make a note to do this tomorrow. There is a difference. Watch this. And I love setting people up for this. So I'm going to see tomorrow in the AR session who actually watched this video if you get this answer right. So let's take a look at the VIX. Nope, the VIX. I need to go back. I think it's, oh, this is embarrassing. 5 years, man. Here you go, guys. Right here. You see May, June-ish of 2013. Folks, this is an Obama teachable moment. I need you to sit up in your chair and listen to me here. In May of 2013, towards the end of June, the VIX went from 12, it looks like right around its resting heart rate at the time, to 24. The VIX doubled in about 3 to 4 days, a week. The VIX doubled, 12 to 24. Did the market pull back or was it going up? Answer to yourself. And obviously it's a video and I'm being facetious and waiting for your answer. I guarantee you 90% of you, except my TGO members, because they know better, said, well, Wiz, obviously the market pulled back if the VIX doubled. And you'd be wrong. Market was up. Write this one down. Market up. VIX up. Something's up. You know what was up? I remember this because I was giving a keynote in San Francisco to Bank of America Merrill Lynch financial advisors. And we stopped the keynote to go take a break to watch what? Ben Bernanke and the Fed. This was the Fed meeting where the market thought that he was going to start the taper. So guess what happened? He was still pumping $85 billion a month into the market, but there was uncertainty. Let me go get some protection, man, in case this guy decides to taper at this meeting. So the VIX doubled from 12 to 24, even as the market went up. I put on a bullish double vertical that made about $12,000. And you know what I did before he even got close to a microphone? I closed it. And I put on a bearish double vertical and made about the same. Climbed up, rolled inverted, and pulled down. And we made over $20,000 on 2 trades in about a week and a half. Why? Because when he came out to the microphone and said, we're not going to do any, as soon as he said that, folks, the quants and everything, vol got smashed. You're not quick enough to trade that. My dad, God bless his soul, he'd say, hey, you know, Matthew, can you drive me to the airport tomorrow at 8 o'clock? I'm like, Dad, your flight's at 1. What are you going, standby? He's like, no, I'll sit there and read my book. I just want to get there early because, you know, if I'm 1 minute late, you know, they're not going to bring that jet back for me. They should have because he deserved it. But here's the point, folks. When you're trading volatility trades like that, you have got to be early. If you're 1 minute late, you can turn a $11,000 winning trade into a $5,000 losing trade. Okay? So that didn't expect to do all of that during this, but I guess since we're talking about volatility, we need to. So here's my point, folks, is volatility can go up even when the market is going up. Market up, VIX up, something is up. Market was up yesterday. What did VIX do? It was up. So hopefully, everybody, I got 5,000 aha moments and some light bulb smashing. So here's my strategic mindset with volatility. When vol is cheap, you buy it. When it's expensive, you sell it. Time to buy vol when we're down at 11. Where was it? Right around here, we had a 10 print on the VIX. I'm like, are you kidding me? Whenever you see a 10 and 11 in front of that decimal point, you get long vol. And lately, when we hit about a 13, it's time to sell it. Here's the Obamacare repeal fiasco. Idiot Republicans. Seriously, guys, you vote 60 times to repeal Obamacare under Obama, but under Republican president, you fail. You're all idiots. There's to people who are like, oh, this guy's a Trump, whatever. No, I'm not. I think he's a clown most of the time, too. So don't get me started. So now, we haven't seen a 15 since when, guys? Since Wiz called the election right, unlike almost everybody else in the world. Yeah, isn't that crazy? I proved Goldman Sachs wrong. I proved Morgan Stanley and JP Morgan. They were all wrong, and Wiz was right. And my members printed money. So, volatility is going to smash. How do I know? Am I Nostradamus? No, I'm not. But folks, if vol isn't going to, if we're not going to hold this 50-day moving average, it's look out below. But look, we just like this week, what was it, 2.5 weeks ago, I put on, remember guys, or my members, I put on a weekly options bull put spread right here, and we made $2,200 in about 3 days. If we don't hold this 50-day moving average here, guys, it's look out below. And like I told you today, this is trench warfare at that point. There's the U.S. lines. There's the Germans. Nobody's running around in here. You're going to get killed. So we're either done or we're going to play the Price is Right mountain climber and keep hugging this 50. Okay? So if we hug the 50, vol's going to come in a little bit. Now, I do not do any trades without figuring out how I'm going to die. Well, how are we potentially going to die? Well, if a lot of people in Korea die, or U.S. servicemen on Okinawa and Guam. China's putting 150 troops on the border of North Korea. We're throwing missiles into Syria, and we might send some more. Putin's not going to meet with Rex Tillerson because he's pissed off at us. We are now claiming that Russia knew that these guys were going to drop these chemicals, and they were going to give us a little bit of a test. Hey, folks, there's a lot of scariness out to the right side of this chart. But that's also why we put on that SPX hedge today, folks. Can you see why TGO's been around for 7 years? And not saying I'm God's gift to trading, but okay, let's hedge our bets, man. I never went flying on a combat mission over Iraq or a training mission over Fort Worth, Texas without an ejection seat. So I can be cautiously bullish, folks. And that word cautiously means I'm going to have an SPX bear put spread that I covered this morning, and I'm going to get short vol here. Can vol go higher? Yeah. Another missile strike. Something goes bump in the night between North and South Korea on the DMZ, and now 25,000 artillery pieces are changing fire, and in 10 minutes, Seoul is reduced to rubble. Right at that point, we're not going to care about our trades, to be honest with you. But yeah, the VIX will be up at 90, and the S&P will be down at 1,500. Potential threats to this trade. I don't want to, well, I do want to scare the hell out of you because some people think, if this was easy, everybody would be doing it, guys, and they're not. So when you sign up for Full Throttle, Doug Robertson, our egghead, is going to give you, he can give you an 18-hour lecture between trading VIX and VXX. First of all, VXX is going to go to zero. They need to rebalance it, right? Over time, the thing goes to zero. Backwardation, contango, all those happy horseshit words. The VIX, you're not actually trading the VIX, folks. You're trading the futures on the VIX. S&P futures, right? 30 days out, calls and puts. So, again, I don't want to I'm already rambling. Don't want to take up too much of your time. I'm going to use a short-term trade on VXX because, look, 18 looks to be kind of as we go down this VIX volatility escalator, looks like 18 is kind of where we top out. Can it go higher? I have to keep on saying this. Yeah. War, this, that, the other thing, vol can keep going up. I don't think it's going to, or I wouldn't be doing this trade. This trade, folks, so I gave you step one, my strategic mind step. Step two is the target. Step three, that was very long commit criteria. It should have been forward. Step four, here's what I want to focus on, folks. This is an incredible tactic. It is called a double vertical. And you have to write this down, folks. A double vertical is a trade where you are really, really, really something. 3 of them. If you have 2 reallys or 1, you don't use this trade. You ready? You have to be either really, really, really bullish or really, really, really bearish. In this case, I am really, really bearish on vol. And you're going to see in a second why it takes 3 reallys, because this is technically 2 trades on top of each other, and it's an afterburner trade. That big Roman candle coming out of the back of my F18 nozzles, that's called the afterburner, man. That's speed. So if this trade's working with us, we're printing money. If it's not, it's going to suck. Okay, so if you're not really, really, really something, don't do it. So I think 18, let me ask you all a question. Wiz, I think you're right. I think the VXX is going to give some back here. I don't think this is the big one. The Fred Sanford, I'm coming, Elizabeth. I think vol's going to smash back down here on VXX. Okay, great. So what could you do? Well, if you were not smart and not a TGO, you could buy a debit spread, right? I'm going to buy a bear put spread on VXX, and I just shake my head and say, why? A bear put spread, folks, is called a what? A debit spread. I hate even saying that word. I like being the house, folks. I like being the Bellagio, man. It doesn't look like it looks because it gives away money. If you think VXX is going down, like I believe, what do you also think it's not going to do? And I'm going to pause for effect because I need you to think about this. If you think VXX is going to go down, what do you think it's also not going to do? Yeah, go up. If you don't think something is going to go up, what type of trade can you do then? Yeah, I smell the wood burning. A bear call spread. So folks, we could do a bear call spread, which is also called a what? A credit spread. I'm taking in coin. And then fund the bear put spread. Yeah? Yep. I feel it too, folks. Here we go. So I'm just going to go out a couple weeks because if vol's going to smash, it's going to smash soon. Okay? You saw the VIX. It's a heart rate monitor. The VIX, it can still stay elevated for, you know, a period of time, but it's like me upstairs on the treadmill in a couple hours. I can do a 10 incline at 10 miles an hour for about a minute, and then I'm going to drop dead. I need to get back to my resting heart rate. So can vol stay elevated? Sure. Will it? I don't think so. Again, I don't think this is the big one. Could be wrong. And if I'm wrong, guess what? I put on that SPX bear put spread. So folks, as you can see, man, I'm rigging my sails for any condition. As an options trader, I don't care which way the market goes. Up, down, or sideways, I got to trade for it, okay? Great week to be doing full throttle. I love this. So on my Options House platform, and you can head to optionshouse.com, write this down, /TGO. Wonder what that stands for. Top Gun Options, right? You can open a free paper trading account and use all these tools and test them out. And then if you fund it with $1,000 or $2,000, whatever it is, you get 60 days commission-free trading, which is a hell of a lot of money for a guy like me. So one of the reasons I like this platform is because up pop the most common tactics. They ain't strategies, right? They're tactics. I'm going to click on vertical spread. I hate this. I'm not a guy that uses 2 words in a row. How many of you say, hey, I'm going to go hit the ATM machine? And I'm the type of guy that goes, wait a minute, you're going to hit the automated teller machine? No, don't do it. But that's why I call this a double vertical. The first thing you should see is the picture. It's 2 vertical spreads on top of each other. All right, Wiz, I'm getting it. It's coming. Here we go. Now, I am going to do a bearish double vertical. Now, think about this. I'm bearish on volatility, right? I think VXX is going to come down. But technically, that means I'm bullish on the overall market because technically, most times, if the market's going up, vol's going to come in, right? And I just gave you the perfect Obama teachable moment. Pull that one out at a cocktail party, guys. Pull it, do a Cliff Clavin the next time you're at Cheers. Yeah, it's a little known fact in June of 2013 that the VIX doubled and the market was going up. Didn't expect to do a Cliff Clavin impersonation. Maybe I'll edit that out. All right, so let me pick my strikes here. We have a lot of fun, folks, here at TGO. So, and again, our slots usually go super fast because you guys do see that we know what the hell we're doing and we have a lot of fun. All right, here we go. I think I did 100. 1 second here, guys. Let me just throw all my metrics around and see if this trade has changed since I was eating my grilled cheese with tomato soup. Nope, it's good to go. All right, here we go. You ready, folks? There is your bearish double vertical. Okay, there's the blue line. The blue line is VXX. Where do we want it to go? To the left, which means volatility is coming in. So here are my 2 trades. A bearish double vertical, folks, is simply 2 vertical spreads on top of each other with the same strategic mindset, bearish. So I'm going to sell 100, why? Risk. Give me a minute. Of the April 28th, why? Because I think if vol's going to smash and the market's going to get back on the horse, it's going to be soon. 18 calls. Why? I want to do it right at the money. 18, I just showed you on the chart, has been short-term resistance on VXX as it goes downhill. All right, Wiz, makes sense. And then I'm going to buy as a hedge in case I'm wrong and the market implodes. This is the big one, nuclear war. I'm really not going to care about these trades if there's nuclear war, but you get what I'm saying. I'm going to buy these upside calls as a hedge in case VXX has a rip-your-face-off rally as the market implodes. This is called a bear call spread. It is also called what? Exactly, a credit spread. So I'm going to take some of this credit that I'm taking in, and I'm going to turn around and buy a bear put spread. I'm going to buy 100 of the April 28th 17 puts. Give us a little bit of if vol's going to come in, folks, and the market rallies, it's going to have velocity. So we'll get below 17 in my opinion. What if you're wrong, Wiz? Well, I'm selling the downside puts at 16.5. This is called a bear put spread, which is also called what, folks? A debit spread. Bear put spread, financed by the bear call spread. Now, I almost got it for a credit. That would have been great, folks. I love doing these double verticals and getting paid to do it. In this case, it's about 8 cents, so I'm not getting paid to do it. VXX. So I take a screenshot for my members and I put it on that urgent alert page. Now, some of you are probably sitting there like, well, Wiz, why 50 cent wide? Why not $1? You could do less contracts, commissions. I'm not going to, we'll talk about that when you become a member. Right now, I don't have time to go through all that because you're not paying for it. So now I'm going to click analyze, and Sister Mary Catherine Buckley here is going to crack your knuckles if you don't look at this the unholy frown face first. Look at the frowny guy. Max potential loss. My max potential loss in this trade is $5,800. That's right in line with my SOP of not wanting to risk more than $5,000 on any one trade in the model portfolio. That's 5% of my 100 grand portfolio. That's me. You could be 1%, you could be 10%, you could be 8%, you could be 20%. I don't give investment advice. This is how I trade. I use a 5% rule, okay? Now we can, if you're okay with that and give your vertical head nod, like, well, that'll suck, but I am okay with it because I can live to fight another day. Then we can look at Mr. Happy Face and say, all right, max potential profit is $4,200. If vol smashes, we could potentially make $4,200 in a couple weeks, okay? And then here's the break even. There's at least a 42% probability of this breaking even. Okay, so a lot of uncertainty out there. So let me grab a screenshot of this, and then I'm going to send out the text alert to my members as well. File, save as, VXX for 11 metrics. So I send out an email after I do the video. I post the video real quick. And again, folks, I get into this when you're a member. I've already gone way too long for this video, but here's the way I would manage this trade. There's a couple things. Let's say we have a rip your face off rally tomorrow and vol gets smashed. Well, we could do a couple things. If the bear put spread has shown some profits, I would close that first. Why, Wiz? It's a debit spread. A debit spread hates what? Theta, time decay, right? A bear call spread, a credit spread loves time decay. So I could close out the bear put spread first and let the bear call spread ride to max profit, okay? Another way to manage it, if we get a vol smash, vol just kind of falls out as the market rallies. I have 100. Yo soy me. I have 100 contracts. Maybe I take 50 off, take some profits, and let the other half ride. Okay. Managing it to the downside. If I lost about half, if I lost about 2 to 3 grand, I'd probably take a look at closing this trade. Okay, that means we're still just wallowing around here, around that 50-day moving average and not making a decisive move, okay? I know that was quick about management there, but when you get on board, I manage this. I send out a text alert if I'm adjusting this. I talk about it every week in this video and what's going on. And you can also get in the ready room once you become a member and ask Doug and I questions or your fellow members questions. Matter of fact, my members do a better job of answering questions sometimes better than I do, okay? Now, again, just like the other trade that I did this morning, let me grab this because I'm going to send out a text alert to my urgent alert members. I'm spending about $800. I'd try and get filled on this trade plus or minus, 8 cents. I'd go down to 0 and up to about 16-cent debit, okay, to get filled in this. Anything outside of that window, it's either too expensive or too cheap for my tastes. Okay? Now, I know there's probably 1,000 questions from people who aren't members on that trade, and here's what I'm going to tell you to do. Come to Accelerated Retirement tomorrow, and after AR tomorrow, we're going to open up our slots, and you're going to be able to get a slot, right? And Accelerated, or after Accelerated Retirement, you're going to be able to grab your slot to get airborne, okay? But I'm going to send this text alert out to my members, and we should be good to go. like I said, there's a lot of trade management. There's a lot more that goes into the double verticals here. But as a as a member, you're going to get access to all of that. Okay. So again, I've rambled on way too much, so I'm going to get out of your way. Make sure you watch the replay to the primary live trade brief that's posted. Make sure you watch Monday's video right here, FT-replay, and make sure you join us tomorrow for our accelerated retirement brief. We've had a great time so far in full throttle week, and it's it's Tuesday afternoon, and we've already done 3 things: the in brief, we've done our primary live trade brief, and now we're doing the urgent alert. Okay, so we're not even halfway done through the week, and we're having a blast. So just imagine what it's like to be a member. Okay, all right, guys, I got to run. Have a great rest of your day. Happy hunting. Make sure you hedge. I'll be back tomorrow clock, exactly that time. Tomorrow clock at 1 o'clock for accelerated retirement. All right, guys, God bless, and I'll see you tomorrow. Have a great rest of your night.